I'm Simon Beardsley, the Chief Executive of Lincolnshire Chamber of Commerce. Welcome to our ChamberConnect webinars. I will be your host this afternoon, so popping up every now and again to take you through this afternoon's proceedings. It's not got that late so quickly. Today's session is on supporting you with cash flow plans. So thank you very much once again for joining us this afternoon on what is one of our first virtual events. So something slightly different for us in terms of our normal face-to-face events that we run. But something at this time we think is really important in being able to connect the business community together and make sure that business can still happen and we can still keep moving things forward. Just make you aware at this stage that this is being recorded. What we're going to do is put the recording on our website. It's there for you either to go back to, and it's something to refer to in future, or to get wider participation in terms of people who weren't able to see this afternoon's session, but will be able to go back and pick out some information from it as well. Now, for a start, I thought I'd just make you aware of what the Chamber of Commerce has been doing over this period of time. And I think it goes without saying, these are unprecedented times. So therefore, we've had to look at the way we work and make sure that we're equipped to support our members going forward. In areas where we have been working hard at the moment is proactively contacting our members, just making sure that we fully understand the issues that they're having at this particular time, whether it be from a small one-man sole trader or whether it's some of the largest organisations. We feel that we need that contact to make sure that we can then dig down into the sort of things that are really important and that members would need help and support with at this time. It doesn't stop you sending in information to us as well. So if you've got something you don't feel is being picked up at the present time, or you would like us to raise through the channels that we have, events@links-chamber.uk is the email address to send information to. I will come back to that at the end, so if you didn't scribble that down in time, I'll let you know what that was at the end. In terms of what we've been doing with that information, well, it's key that we pass the information to the right people who can make decisions. And Lincolnshire Chamber of Commerce is one of 53 in the United Kingdom. We get together with our national body, British Chambers, every day. We make sure that the common flow of information from all of our chambers, all of our chamber members, is then put through to the right government departments or those who can make a difference at this particular stage. Now, if it's not a national issue, we're certainly working with partners in local authorities, and also the local enterprise partnership at this time as well. If you haven't looked so far, we've been making sure that we're putting information on the web. We've got a COVID-19 hub. There's lots of tips, information and support that's updated at least on a daily basis. Through the past week or so, that's been on an hourly basis to make sure it is up to date. It's got the latest information there. And also, we've been sending out proactive information, whether it be via web news or whether it by e-shots or social media. If you're not following us on LinkedIn, make sure you are connected to us, because information about future events comes up on there. Also some valuable information about the things that we are doing as well. And this event today came out of the feedback that we got from our members. They felt a series of webinars, which we're now calling ChamberConnect, was really important to make sure that we supported businesses and their staff throughout this current coronavirus crisis. Today, I will be joined shortly by Kayleigh Williams. Kayleigh is the Head of Business Services at Duncan and Toplis. And this particular session will focus on putting together a 13-week cash flow plan and more about the understanding about putting it together so you can use it to take forward for borrowing requirements that you may have in the short term or the longer term as well. How this will work is that Kayleigh will go through an interactive display with you about putting together such a plan. There will be opportunities to ask questions throughout this, and how to do so. There's two ways that I said I'd come back to at the start. Again, it's the chat along the bottom of the screen. If you hit chat, it will bring up a normal text box. If you want to put your questions in there, they will come to us and we can come to those questions. Also, if you want to have a more of an interactive discussion, if you hover over or click on the participants button along the bottom, you'll see the option to put your hand up. If you put your hand up, we'll then stop and come to you for your questions. It may be that you haven't had your question answered at the end of the session, but there will be an opportunity there to ask further questions and answered at the end of the session as well. We're expecting this to run between about 45 minutes and an hour. So without further ado, I'm now going to hand you over to Kayleigh, and with luck, the technology is going to work. So Kayleigh, are you there?
I am. Hello.
Fantastic.
Hi, welcome everyone to this afternoon's event. So as Simon said, I'm the Head of Business Services for Duncan and Toplis. My background is almost 13 years working in the accountancy profession. I'm working with everyone from sole traders through to kind of small, medium-sized businesses. And during that time, I've worked for both practice and industry. So cash flow is something that I come across on a regular basis, and it's certainly quite key in the times that we find ourselves in, and really getting that cash flow in place, and having something that you can rely on to help you to navigate the next few months is really key. What I wanted to take everyone through today is to give you some pointers if you wouldn't usually do a cash flow, how you can get started, what you can then do with that information, and then if you are starting to consider the government funding and the CBILS, how you then go about speaking to people about that funding requirement. So obviously the government are putting in place an awful lot of help at the moment to try and ensure that businesses do continue, and what I think it's important to realise is that we don't want to lose focus of the bigger picture, and actually the more that you can do to sustain your business yourself through this period of time, and putting these cash flow projections in place so that you can almost try and navigate this yourself, is going to reduce your exposure further down the road. I think we need to all recognise that although the government are putting this help in place, it's really vital that actually we are going to come out of the other side of this, and the health of your business is going to be dependent on the work that you put in today as to what the future of your business then is going to look like. So I've got a really basic cash flow that I've put together that I'm going to share as a resource after today's webinar. So if you haven't ever built a 13-week cash flow, you've got a template to start with, and you can use that to set yourself off. So hopefully this will share. Okay, so as I said, it's really simple. Now, the important thing with putting together any cash flow is that your information needs to be up to date. So if you're traditionally a business that wouldn't reconcile your bank account until it's time to do your VAT return, or it's coming to the end of March and maybe you'd wait a whole month before you reconcile your information, that means that potentially the amount of money owed to you and the amount of money that you owe is going to be vastly different from actually where you stand today. So my first piece of advice is to get your bank reconciled to today, and keep on top of reconciling your bank account from this point forward. If you're going to produce 13-week cash flow, that is a continual cycle. So making sure that bank is continually reconciled is going to ensure that you have the key information and the relevant information for your business. So as I said, this is a really simple template. There's not an awful lot of formulas in there, so it will total everything for you. But it's not picking up information from all over the place. So you can literally just fill in the information that you have. What you're going to want to start with is your knowns. So we are in unprecedented times, and generally when you prepare a cash flow, you have an expectation around what money is going to come in, what you need to pay out, and your trading cycle is probably pretty known to you. But actually there's a lot of unknowns at this moment in time, and what you're trying to do is proactively manage the things in your business that you can control. So what I'd recommend is that when you come to start filling in your cash flow, is that you start with all of the information that you know. So that's things like if you've got supplier agreements in place and you've got trade accounts, you know what your trade terms are with those suppliers. So drop those in as if you were going to pay them on time. Put them in at where you would have paid them had we not have had this outbreak and you were just continuing in your everyday business. Then you're going to put in your other knowns, so things like your wages, your rents, anything that you pay on direct debit, because they're all items that are pretty fixed and will start to build that cash flow. If you're VAT registered, I would also recommend that if you have a VAT payment in this 13-week period, that you put that VAT payment into your cash flow. Now, I know that the government have released guidance to say that they are going to defer the VAT. However, that VAT still does need to be paid. And by putting it into your 13-week cash flow, you're recognising, actually, can I pay that now? And then it's gone and I've not got to think about it. Or if I do need to defer it, as I said, you're going to keep this rolling as a 13-week cash flow. So once we come out of June and then we're into that period where you're going to need to start repaying it, you can then start to see when is the most suitable time to make that VAT payment. Once you've put in all of your known costs, you can then start to overlay your expectations. And in this scenario, your income is going to be an expectation. You can't put it in as a known, because the payment patterns that your customers may usually pay you on are not necessarily going to be the payment patterns that they will pay you on going forward. So if you have regular customers, start to put in when you believe those customers would usually have paid you, but it is an expectation rather than that's definitely when that is going to happen. And then once you've started to put that information in, that should then give you a view of actually how much money over the next 13 weeks am I going to be short, or is there 1 week where actually if that customer doesn't pay me, I've got a large quantity of supplier invoices that I need to get paid, and actually I'm not going to be able to meet that requirement. Once you've built the cash flow, you can then start looking at how you can manage your cash flow through the next 13 weeks. So with your knowns, let's start with your supplier agreement. So if your credit terms are usually 30 days with your suppliers, use the goodwill that you have in that relationship to start speaking to them. Businesses are going to succeed through this period if they help other businesses, and the actions of the businesses today is really going to be impactful in the future, because it will stick in people's minds as to who did what during this pandemic to help business. So speaking to your suppliers early and being open and honest and having those conversations, and say to them, actually, if this customer pays me at this point in time, then I can make my payment to you at this date. However, if that doesn't happen, I need to pay that supplier 15 days later. You're managing that conversation with your supplier, and then what that's allowing them to do is continue and plan out their cash flow as well. Everything that you're doing in the cash flow is about what you are able to manage yourself. So where you have customers that their invoices aren't yet due, it's even worth picking up the phone to them and asking them the question of whether they're okay, how they're finding their business during this period of time, and whether you can expect their payment to be made within the normal tolerance that you would expect for their payment, or whether they are going to extend their payment terms with you. And again, that'll allow you to then change that in your cash flow, and it give you a different trajectory of what your requirement over the next 13 weeks is going to be. Does anyone have any questions around what I've said so far? No. Okay. So yeah, after you've put all of that information together, you can then start to look at the deficit. Now, there's going to be a variety of businesses potentially on this call. Some of you may have already had to close your doors, and you may already be furloughing your team members. So if that is the case, you're trying to bring in the invoices that you have already put out to customers and bringing the money from that, whilst paying anything that you have outstanding on your accounts. With your furloughed employees, within the cash flow, I have put the job retention scheme. So you would put your wages in the normal way, and then if you are eligible for the scheme and you are furloughing your employees at this time, you can then put that income in the top line. If you are eligible for the rates grant that is being deployed through your local council, you can put that in as an element of income as well. And everything that you're doing here is to try and navigate your way through this period of time as best you can, without necessarily having to use the CBILS or borrow additional funding. What the government is putting in place is really helpful, and it's going to help a lot of businesses, but it's not investment money. It's money to help you survive during this period of time, which then means that it's not growing you as a business. It's supporting you and keeping you above water. And at the end of all of this, that money is then going to need to be repaid. And what you don't know today, and what all of us don't know today, is actually what the future will look like, whether this will change the way that we are as consumers, whether it will impact people's incomes that dramatically, that actually they haven't got all of that free money for spending, and then that has a knock-on impact with your business. So before you go to that investment and to look for these additional financial tools, my recommendation would always be try to pull on the other elements that the government are putting in place to try and support yourself during this period of time and make yourself as robust as possible. If you've done everything in your cash flow and you've had those proactive conversations and you've started to navigate yourself naturally without additional investment, you've furloughed your employees and you've obtained your rates grant, there's then a few other elements that you can start to claim, again, without causing yourself any additional debt into the business. So that's things like the VAT deferral. So that is automatic, and everyone's VAT is being deferred until the end of June. If you have a direct debit mandate set up, I would recommend that you cancel it. The Revenue have said that if the mandate is set up, they will still try and make the pull. So my recommendation is to make sure that you've cancelled that if you don't want to make your VAT payment. But again, if you are in the position to make it, then my recommendation would be do, because again, the money has to be repaid at some point, and if you have the funds available now, it may be worth taking that hit rather than delaying it further down the road. If you have not yet furloughed your employees and you are still continuing to trade, HMRC are being really good with putting in place the time to pay agreements at the moment. So you can defer your PAYE, and the HMRC have set up a separate helpline in order for people to defer that. The call times and the waiting times on that line last week were around an hour, if not a little bit longer. So it was taking some time to get through. But again, if you want to make those deferrals, then take that as a route, again, to help release your cash flow naturally without having to take the additional debt on. And then once you've put all of those agreements in place and you've navigated as much as you can with your suppliers and your customers, if at that end point you then realise that, yes, I do genuinely have a deficit in my cash flow, that's when you can start to look at the coronavirus business interruption loan scheme. Once you've explored all of those other channels, that's the point at which you're going to want to start to take on debt, because as I say, It isn't an investment as such. It is debt, and it is to help you, but it does have to be repaid. So if you then want to start to explore CBILS, my recommendation at that point is to use the information that you've dropped into your cash flow and start a conversation with either your bank manager or your accountant. The cash flow that I've provided and which you've put together, you'll have spent a long time putting together, but don't just fling them straight off to the banks and start submitting information. It needs to be done in a coordinated way. And the more information that you can provide to your bank that gives them security that actually the lending requirement is a sensible requirement, because the banks are still having to make sure that they are lending responsibly, even with the government's guarantees. Making sure that that information that's provided is robust is going to be key. So you've built your cash flow to run your business or to make sure that you can navigate the business for the next 13 weeks. Then once you start to get into lending requirements, start having conversations with your bank, with your accountant, and they're going to be able to help you to top and tail that cash flow. They may be able to look through it and make any further additional recommendations, or they might be able to add a few different elements to that perhaps you didn't think about. When we start to look at CBILS, the information that the banks are generally asking for is that you do have that 13-week cash flow. So they can see how hard you're going to be hit over this next 3 months. Some banks are also looking for a 12-month cash flow, which is, to demonstrate that you are going to be able to repay the money after this period of time. A good set of management information. So if your last set of financial accounts weren't as healthy as you perhaps would have liked them, but you've had a better year this year, the banks are accepting management information to back and support your claim for a loan. And then, of course, your full set of financial statements. So the last set of accounts that you either submitted to Companies House or put on your tax return. Some of the banks are also looking to take statements of personal assets and income. Statements of personal assets, liabilities, income and expenditure. So they are trying to pull in that additional information. Again, your accountant or your finance person can help you collate all of this information together to make sure that what you are submitting is robust. But the reason that I would advise speaking to your accountant is so that they can look over all of this information and genuinely advise you as to whether it's a sensible idea for you to take funding and continue in this route, or whether there are maybe difficult conversations to have in terms of maybe reducing the size and scale of your business, or taking headcount actually out of your business. But you want to have had those conversations with your accountant first to make sure that you're not taking on funding that actually you aren't going to be repaid, or it could be detrimental to the business in the future. So it looks like we've got a question.
Yeah, so this is just moving back to your spreadsheet. Could you just give us an update? Do you know when the funding from the salary support scheme, if you're getting 80% back, when's that likely to be coming back, just to put in your cash flow? Is there a current date when that might be applicable?
So the government are working really hard to get the portal up and running by the end of April. Having spoken to several people and recognising that it's actually quite a substantial undertaking for the government to build that portal and put everything in place, again, to protect yourself and to make sure that you've kind of thought of everything in that cash flow, I would almost be inclined to think even though you've furloughed those employees, it may be worth building in the payment of 80%, because it could be that you end up having to pay out before the money comes back in, just if there's any sort of delay. But the government's intention is that where anyone is going to be paid at the month end of April, that you should have that money in your account ready to pay out. But I would always suggest that it would be a good idea to try and keep some money back to be able to pay the salaries. And again, we are in unprecedented times. We are in a very strange situation, and actually maybe it's worth being open and honest with your employees. So actually, if it isn't viable for you to pay that April wages because you are already relatively closed down and it just won't suit your cash flow, speak to your employees. What is the minimum amount of money that they would need to make sure that their core bills are paid, so that they aren't being impacted financially, but you can then continue? And if you can only pay them, let's say 30-40% of what they should be getting, but it covers all of their core bills, and then they have to wait an additional week, if you've had that conversation from the off and they know that their mortgage is paid or their financial commitments are covered, they're probably going to be more likely to work with you, because they know the money is coming. It's just a timing issue. So again, I think being open and honest at this point in time and getting those conversations in as early as possible to kind of allay fears, it is key. But hopefully the government will have the portal set up by the end of April, and the money should come back ahead of payroll.
Okay, I've got another question that's or a statement that's posed by Lucy. I just wonder, Lucy Painter, if you're there, I'm just unmute you in a second. You've raised an observation about C-bills. If you are looking to go down that particular route, that lenders are asking for more information at the moment. I'm going to try and unmute you so you can probably explain a little bit more. Lucy,
Okay.
Are you there?
Hello there. Yes, I'm here. Can you hear me?
Yes, indeed.
Perfect. Okay. Well, Kayleigh, you're absolutely right that the banks are looking for very robust information with regards to the C-bills loans, and they've all been scrabbling as much as everybody else, I think, to try and get this product out to market. It's never been known before, I don't think, to get a product from a bank out in 10 days. You're usually looking at an 8 to 12 month cycle from a product delivery. So whilst it's frustrating for businesses, as I know with my clients, hanging on the phone for them, they have done a tremendous job to get a lot out there at the moment. We have seen some changes this week with things, some of the detail, I suppose, things like personal guarantees. You might have seen that in the news earlier on in the week. But going back to the information that's required, it's not only the cash flow forecasts, it's also what happened last year. So 2019 is really what businesses are looking at, the banks are looking at with regards to businesses. And you made a comment, Kayleigh, about there might be some tough decisions that taking out the loan, it has to be done in a responsible way to make sure that as and when we come out of this situation, that the business will be able to afford that loan going forward. And that's why the banks are scrutinizing the financial information so much more than perhaps they had been doing previously. So you'll need to have your 2019 figures absolutely up to date as well, so as far as possible. So I'm sure accountants are being asked for end of year to be pulled forward as much as possible. I don't know if you're seeing that, Simon, in your business. As well as, of course, the forecast for the future. The banks are also asking for an impact statement on how COVID-19 has affected your business. So that's looking at all the various sales lines, I suppose, because some sales lines remain open, some have closed down depending on certain industries. So you need to think about that. And the other area they're looking at, you mentioned about the asset and liability statements, so that the personal aspects, again, that is being looked at. There are some banks asking for both business bank statements as well as personal bank statements. some 3 months, some up to 6 months worth of statements when they're looking at either the CBILS loan or indeed any deferment of payment for any other finance agreements that might be out at the moment.
It does feel, Lucy, that that all of the banks have kind of taken a slightly different variation on the same theme, but actually potentially more based on their deemed kind
their
of
policies
of risks. Yeah,
no, absolutely. So the government put out a framework for this particular interruption loan, but didn't give the detail. So that's what the banks were doing in that 10-day period between the budget and when the scheme first went live at the beginning of this week. They were working out the detail behind it, and you're right, Kayleigh. A lot of it fits in with their own risk management policy that they have, and what they're looking at from a credit, so their credit policies. There are some elements that we're beginning to see some consistency on now, and that's the point I made earlier, for example, about personal guarantees. That's where we're starting to see some of the consistencies now, as opposed to rates, which will be dependent on each client and in each bank, as well as the term that they will offer it for clients. So those will still continue to be internal credit decisions, with each bank operating under different policies.
Okay, thank you, Lucy. That's been really helpful in terms of just adding some extra information to that. I'll just hold for a second in terms of, is there anybody else with a question at this stage that would like to put the hand up and either follow on with that particular line, or is there any other questions that we have so far? Okay, so I've got some stored questions anyway, some that have come up earlier, in terms that I'm going to put directly to Kayleigh if possible. How often should you go back to the cash flow that you've just talked with us about, and renew it over that period of time, because things will change that you necessarily didn't expect at day one?
Yeah, I think with the environment that we currently find ourselves in, the more frequently that you can be keeping that cash flow up to date, the better. Some clients have opted to actually do daily cash flow forecasting rather than just doing a week, and they are updating that on a daily basis. If that's relevant for your business and actually your kind of margins of getting everything paid and resolved are quite tight, then actually my recommendation would be, yes, do stay on top of the cash flow, do try and update it on a daily or couple of days basis, and if you've got a little bit more tolerance, then certainly no less than once a week. Everything is changing so rapidly, and in order to have those proactive conversations, you do need to keep on top of that information.
And can I just come back to you on the proactive questions, because sometimes actually putting your hand up and saying I have got a problem can be difficult. It's something, sometimes those things are outside your control. When is the best stage to have seen the direction of travel in your cash flow and think, actually, I need some help? Is it when you start getting into those actuals, or is it when you see the forecast is going in a certain trajectory? What's the best time to ask for help?
Certainly, if you can see that your trajectory is going down, it is difficult to ask for help, and certainly because so many things can change between now and perhaps when you're going to hit that pinch point. But have the conversation sooner. The sooner that you have the conversation, the easier that conversation actually is, and everyone is in the same boat to a certain extent at the moment. We are all in uncertain times, and regardless of the size of your business, everyone is being impacted by this. So the sooner that you have that difficult conversation, the sooner that you can actually start to alleviate some of that stress and anxiety that you're probably feeling as a business owner right now, because I can see Kay nodding. It does make you anxious, and not knowing makes you anxious, and actually, grabbing the bull by the horns and saying, yes, I do need help and I need to go and get some resource from somewhere and have those conversations. The sooner you can do that, the sooner you can start to move forward, and you can make a plan for something that is not necessarily plannable.
I suppose this is an opportunity for you to say, well, me, but we're going to be busy at this particular period of time. If you're running your business, you may well have competing issues to look at this time. Some people are very good at the business, and finance comes a secondary issue. But I suppose in such times, this has got to take a step up the priority ladder as such. So if that is the case and support is needed, do you come to your accountant first in terms of helping for further support and guidance in a cash flow, or are there other online tutoring things that you can look at? What's the way to help and support at that stage?
So we're providing the cash flow template as a starting point to at least give you somewhere to begin. If finance and cash flow forecasting is not your forte, then the recommendation is speak to your accountant. They are skilled. We train for this. We are there to support and to help, and it's not a sales pitch at all. You all probably have a variety of different accountants, but speak to yours and find out whether they can help you with it, because it might actually be that if you are trying to continue running your business, it's actually much more beneficial for you to spend time winning business, finding the opportunities, than it is for you to be sat doing that cash flow forecast. And if you hand that element over to your accountant and let them plug in all of the information and bring your information up to date, that is actually going to be better for you in the long run than you spending hours trying to figure out what your cash flow should look like. And then your accountants can have that conversation with you to say, look, these are where your pinch points are. You can then start having those conversations with your accountant, and they can also give you some guidance and some help around the conversations, and give you a little bit of maybe a framework of the conversation that you're going to have with your suppliers or your customers, just to give you a little bit of extra reassurance around what sort of things you are going to want to discuss with people.
One of the things you mentioned quite a few times is Excel. Is Excel always the best solution to use for cash flows, or are there other products that are available that might be equally as useful?
I think Excel is an easy go-to for the accountants. It's something that we're all familiar with, and generally it's a good starting point for most. We live in kind of this digital revolution right now, and actually there are cash flow forecasting tools on the market. We at Duncan and Toplis have partnered with a cash flow forecasting software provider. So any of our clients that use Xero or QuickBooks for their accounts, because those softwares are already online, we can plug that cash flow into our clients' bookkeeping, and we can kind of do a lot of the data configuration just by plugging in the two systems to each other, provided again that the information in Xero and QuickBooks is up to date and you haven't just left reconciling your bank to like last quarter.
So that brings me nicely on to this next question, in terms of when you see cash flows produced, what's the main mistakes that you come across? What are the common issues that you think, oh my goodness, is there a regular few things, your best practice you would say to do so you don't pick up the mistakes?
So people not always considering if you've got invoices on your ledger that are older than 6 months. I've seen people try and put those invoices into their cash flow forecast on the assumption that they may just magically come into the account, even though they've been outstanding for some period of time. If you're actively chasing down that debt and you've got a promised date, then yeah, by all means put it in. But actually, if it's over 6 months, chances are that actually that debt isn't going to come in without some help to bring it in. So try and avoid putting in invoices that have been outstanding for a long period of time, because it isn't a known income. I think clients also have a tendency to forget about their VAT. So again, although the VAT payment has been deferred, it still does need to be paid. And if you are going to continue with the habit of a 13-week cash flow, we will get to the next quarter and you will need to make that VAT payment as we stand today. And clients quite often forget to put that payment in. So they're two quite key ones, and obviously your VAT payment can be quite substantial. So it is best to make sure that it's in there.
Okay, so we've got a final opportunity now for participants to flag any other questions they've got or any observations at this stage. Again, just to remind you, participant button, if you click on it and raise a hand, or if you want to put some further chat at the bottom. Whilst I allow you to do so, whether you decide to put your hands up, just hand back over to Kayleigh. Is there anything else further to wrap up with at this stage before I do so, or hand over for further questions?
I mean, it feels like some of that was quite doom and gloom, and it kind of assumes that, you know, we're all going to be stretched over the next few months. But I think the important thing to remember is that, you know, businesses survived the recession, businesses have survived Brexit. This is another challenge, and actually, as a business community, we will get through this, and we will come out of it. And the shape that the business is in when they come out the other side is very much dependent on the amount of legwork that people are prepared to put in now, to kind of build themselves the best platform to move forward.
That's fantastic. So there's no other questions at this stage. So I said it'd be between about 45 minutes and an hour. We've got to 45 minutes. If I could just update you on what next in terms of the ChamberConnect programme. We have more webinars coming up over the next week. They normally happen around 2 o'clock. The next one is financial support for the self-employed, which is tomorrow at 2 o'clock. So if you're operating a small business or you're self-employed, make sure you're tuning into that one for specific advice on how either government support or other support can help you at this time. On Thursday, we've got job retention scheme update, which last week we had an initial webinar to focus on the job support scheme. It ended up spending quite a lot of time on furloughing employees. I do think on this occasion there'll be more detailed advice required on that. There's some updated legislation that's come out recently, so if you have got employees and you're thinking of going down that route, Thursday at 2 o'clock is that one. In terms of if you've got any more, the other ones that we've got coming up will be around business rate support, and hopefully speaking to some of the local authorities in terms of the processes that they're putting in place. We've got an opportunity where our chair will speak to the local enterprise partnership, so businesses can put their views to them. We're also trying to look on to the future as well, and maybe not focus on such of the nitty-gritty around support, but also focus on people. Really important to make sure that we focus on individuals within our team who are working slightly differently, and we will be putting on some webinars that focus on managing stress and managing remote workers as well. So more information can be found, as I said earlier, on links-chamber.co.uk/events. If you have got any more questions that you'd like us to put to Kayleigh, if you've got any more questions for us or suggestions on our events going forward, events@links-chamber.co.uk is the place where to put those questions to. For now, I would like to give a huge thanks to Kayleigh from Duncan and Toplis for her support this afternoon. It's been really helpful and informative, and we're very grateful for that. We hope you have all enjoyed this production, and we hope you have a productive afternoon. So thank you very much for joining us, and we look forward to seeing you once again. Thank you for now. Bye-bye.
Thank you. Bye.